Tuesday, August 26th. Market analysis, Stan Ehrlich. I've been talking about for a couple of weeks now, I think, the beginning of a move down during sometimes August, September, almost positively, if it's not already in progress, and into the October lows. And I'm going to do a special report. It's free of charge. Just email me at info@ersignals.com. Now, stock market indexes went back up again today. There are no new highs for the total trend. We're back up to the area on Friday's rally high when the Fed made a surprise announcement. And it implied that the interest rates would get lowered in September. Now, I don't know how much down and when, but that was the implication. So that is built into the market. And I said so on Friday of last week. Went down yesterday, came right back up again today, a little higher actually on the close than the high close on Friday, which was not a new high close in the last couple of weeks or a higher high. If we do have a higher high close above all previous rally highs, again on a closing basis, it'll force me to abandon my bearishness for the moment, and we probably will have another sharp rally for a few days or maybe even a week. We're not overbought in some of these indexes at this point. The spider, the MES we're looking at, not overbought. Could be a little double or triple top. You got to watch very carefully here. This is a significant price level. The beginning of a sharp rally, I don't vote for that, but it could be. Or the beginning of a break that could last for many weeks and go down into October. And I'm thinking it could come down into the ballpark range of, 6,112 or even lower. Now, the key breaking point, and I see I've lost my markings on this chart. I don't know why. But one of the most important levels is across the lows that were in November and January, and that would be right about there. But you could also show a level right here, just underneath the last couple of months. So this little ballpark area is good support. 62.81 down to a little bit lower, 62.44. Closing below that. I think we're well on our way to the October lows and looking for a lot lower. Next, 5-minute chart shows a strong close, but no major upside breakout. Coming closer, yes, but remember, chart top formations frequently involve rallies that are very close to previous highs or even a little bit above previous highs, and then a complete failure. So you've got to watch very closely these attempts to make new highs for significant time frames. I'm not talking a couple of days. I'm talking a few weeks or months or more. Daily data chart spider. Same story as the E-mini as you would expect. Sharp rally in the close. No breakout, though. We have the QQQ, NASDAQ. A little rally, but nowhere near a higher high. And I'm alluding to the possibility, and I think I'm going to pass on this because I don't remember the code. Make my little markings for the shoulders, but I think the first shoulder high, July 31st. Top of the market, overbought the high day, of course, August 13th. Tomorrow will be exactly the right number of days from the first shoulder high to the head of the formation. Then you count the same number of days to the right. It's tomorrow. So if we go up just a little bit tomorrow, first shoulder high at that level, second one has almost been there already. It's really good enough. If we start to go straight down or have a new high by a tiny amount and then go down, but we've got to go down whether you make a little bit of a new high or not to be a last shoulder high. The timing is right. The price level is extremely close. The trouble with this pattern is it's looking pretty good, but the neckline, that's okay. The whole pattern is only 1 month. Not very big. The downside objective is not huge at all. I'm going to ballpark it into this couple of support areas. That's about all. But they could trigger a lot bigger decline. Sometimes small patterns start something very big. Next, little rally in the close, no upside breakout. NASDAQ futures, same pattern is potentially building. Same timing point would be tomorrow. And the rally high could be up to, I guess, 23,832. Yeah, which is awfully close to a new high for the whole damn trend. So the first shoulder was close, then you got the higher high they had, and then 10 days later you're supposed to have the last shoulder, which will be tomorrow, and I can allow it to make a new high all the way up to, give or take a little bit, 23,826. And then Tierra del Fuego. Head south. Next, Land of Fire, slang for southern tip of South America, Chile, I believe. NASDAQ, no breakout, 5-minute chart. What about the YM? Got overbought, hit resistance on the Dow, bang, right up against it very accurately, and it's pulled back down yesterday and came up a little bit today, nothing special. But it did start to bounce off some support. New high in the YM could bring us very quickly a new high for the whole trend, including last November, December, and January, February. Not too far from it. Just a moment. Okay. We've got the 5-minute chart of the YM. All right. What about the Russell? It also has stalled out in overbought conditions, but today's high is quite close to the previous. We're in a very wide range of resistance. So I don't know. This looks like a relatively idealistic spot. I've got a yellow line there. Goes back to all these clustered highs. A couple of more. Some in here. A bottom. Looks good. Will it continue to stop this rally? Been 3 days now. Next. Can't seem to make it above the high last Friday. Didn't do it on Monday. Sank a little. Came back. Didn't do it today. Watch this closely. Looking at bonds. Down a bit. Remember, I'm expecting sideways to lower in a relatively jagged, stair-stepping down market. Not particularly strong, big moves. Overall, I think it's building a giant bottom, but it may be weeks or even a little longer, months, until we see new highs, which would mean lower rate expectations than just this allusion to it in the next month. Now, we're looking at an outside update on notes. That's a little more friendly. Will it work? Outside up days I like, but especially in oversold condition, and this is very neutral. But a bullish engulfing candlestick is supposed to help prices work a little higher for an ambiguous amount and an ambiguous amount of time. But it could break out to the upside here. You got to watch that. If that happens on a closing basis above 12, well, let's call it 12 and a half, 12.16, that'll do the job. Then we have the likelihood of a lot higher fairly soon. Next, crude. Drop right back down, looking for a test of support again, looking for it to break below support. The energy complex is looking fairly weak. Next, we have natural gas. This head and shoulder top is now predicted to go down to 1.325 because we've changed contract months, and that changes the objective a little bit. That was originally talking 1 or 1.1, so now it's 1.3, a little higher. Same pattern, same dates, same everything else, looking for a lot lower. Next, almost a bearish engulfing, big drop, new low close for the previous 3 days, including a pretty big up day. And I think it's going to challenge support and come down to this support area, which is, yeah, probably that's the best spot for it. starting at 2.1 and lower. So I'm bearish. Next, gold. Outside up day. Looks friendly, but we're between a rock and a hard spot here. We've seen it's topped out basically once, twice, 3 times, 4 times, 5 times, and you can call it 6 if you want, in this yellow zone, 35.35 down to about 34.84. Interesting. 34.80. Yeah, okay. And the support level bottomed out once, twice, 3, 4, 5, 6. In the last, 4 or 5 months? Can't seem to break out one way or the other. Next, resistance at a little bit higher. Silver, let's rearrange that subgraph. Coming close to overbought, not quite yet. So I'm a little bit friendly short term, but not trusting it much. You realize that if the market stopped rallying right here, right now, we would have very possibly the last shoulder high. Let me see if there's a parallel to this. Ooh, it is. If you draw the neckline on a head and shoulder top or bottom, sometimes the slope of that line will cross the first shoulder and the last shoulder, as long as it doesn't violate any other rules. And that's exactly what we're looking at right here, right now. So, gosh, that adds a little bit more bearishness to my expectation. And immediate. Should not go higher than today's high and should go straight down if, capital I, capital F, this is a last shoulder high. And if you think that's true, then you've got a very big move in front of you. Next, platinum. Little higher close, kind of like a small rock on a hard spot, waiting for an upside, downside breakout. I favor down. Next, copper crash. Today, we finally made a new high by a little tiny bit since the crash in the day after. But we are basically still in a resistance level now at the top of it based on today's close. Not breaking out yet, but pretty darn close. Pull this over to the right a little bit more. Yep, that's about it. So still in resistance. Let's see what happens next. A new high close here could cause a rally. That's not too bad. Maybe even up to this next resistance area up here. Looks possible. Next, but not very optimistic longer term. Short term, maybe friendly. Depends upon a breakout or not. The grain complex is showing, since the last couple of weeks, some very interesting potential long-term situations. We had a bullish engulfing on the soybeans on August 11th. Very sharp up day the next day. Had a bearish engulfing that did not work at all. It lasted about 4 days and then made a higher high. Since then, we've had a couple dip down days, not much. Today, we were actually closing a hair higher. That could have been it. I'm liking what I'm seeing. I'm looking for a touch of 1076. Closing above that, another challenge of 11 flat, 1100, 1100. And above that is very interesting because that'll be a new high for a year. That could be a long-term upside breakout if you close over 1100. That upside objective is 1030 plus. We had a bullish engulfing in soybean oil just a couple of days ago, last week. Bottom of the break, smack dab on the neckline of a head and shoulder that's still in force. So we saw a big down day today. It doesn't cancel a pattern. This pattern broke out, classic breakout gap, June 16, a month and a half ago. Came down, tested the neckline, made new highs to resistance overbought, stopped on the rally, resistance overbought, came all the way back down to exactly the neckline and had a bullish engulfing ER buy signal that shot straight up for 2 days. Yesterday, a little bit of a dip, a little more of a dip, not so small today, but doesn't violate the rule. The rule is don't close below last Thursday's low, August 21st. That would be below the neckline and below the lowest low since then, and below the low of a bullish engulfing. Next chart. Well, we went back up again on soybean meal a little. I don't have any major bottom. All I've got is new highs for quite a while, a month and a half, 2 months. Testing a major resistance area and overbought condition did provide a little bit of a dip. But if we start closing above the 298.70 level, then we could slide all the way up to 307 without a problem. And now we're starting to eat our way into some very profound longer-term resistance. And if it keeps on going, we can have a major turning point already have happened, and I couldn't tell at the time. Sorry. A lot of divergence. The lowest RSI reading was a lot earlier than the bottom price-wise. Next chart. We've got a bullish engulfing in corn. Not bad. About a week and a half ago. Yesterday was a new high for the move up, and today it moves back down a little. I'm liking it. I'm looking for a move up to close an old gap, and that'll be up to as far as 440. And we're 09 at the moment, so that's not bad. 30 cents, 31, whatever. But if that doesn't stop it, then you're looking at resistance areas, and like some of the other indexes, or grains, I should say, not indexes, the grains, it's being able to push its way up okay. So why not corn? We got a bottom almost to the exact day, just slightly after, and the low on that green bullish engulfing was almost the lowest low for the whole trend. Almost. But the beginning of the rally, that's the good part. What about wheat? Oh boy, we got another bullish engulfing. That was last week on the 20th, Wednesday. And it is the lowest low for the whole trend down for years so far. Now, that is a new high close today. So I'm looking for a high above today and yesterday's highs on a close, probably in the next couple of days. And then a test of resistance. Now, how it handles the resistance area, and it'll be overbought probably at the time it gets there after a little bit of a dip, is extremely important. Okay, we've got Shell. Resistance, close to being overbought. I think it's about to top out and come right back down. Next, we got an outside up day, barely, in Apple. It might rally toward the previous highs here, 235 and a fraction. I'm even doubting that. Don't have much expectation on a lot of strength here. Maybe just a little bit more. In an area of resistance, which the high of which is 237, but the recent rally high was 235.05. So, between 235 and 237 doesn't look unlikely, but I just don't trust it. Next, minor new high close, and that's for almost 2 months. That's not bad. This is Tesla, but a fairly sizable chunk of resistance, a little higher, and then a little bit above that. So the bull trend line's hanging in there. Let's see if it can, what it can do on the upside, but I'm not liking the upside much. We're pretty close to overbought. Next, we got a bullish engulfing a couple of days ago in NVIDIA. Worked up yesterday and again today. Not very much, but the bullish engulfing is working perfectly so far. So I'm looking for a test of recent rally highs of 142 and a quarter. And because of the bullish engulfing, maybe pushing through that for new highs above 184 and a half. And we're back to, whoops, the E-mini. You guys have a good day and a great day. And profitable trading to you.